to actually trade ahead of the GDP numbers at midday?
Cautiousness on the Australian share market today, and that's because of the comments that came through from the finance minister from China. On Friday, he was quoted in a newspaper saying that he wouldn't be surprised if China saw an average growth rate of 7% in 2013, and they would be able to live with a growth rate of 6.5%. That, of course, was retracted on Saturday, saying he was actually saying that they are looking at achieving their target rate of 7.5%. So I think going into these numbers, there is a little bit of expectation for some weakness. The consensus is still for 7.5% annualized growth, and that follows the first quarter numbers of 7.7% annualized growth. So these numbers are going to be important, especially for the Australian dollar. The Australian dollar saw considerable weakness over the weekend after those initial comments falling as low as 90 US cents. So we'll be watching the Aussie dollar reaction. We have seen a bit of a recovery in the Aussie dollar, but those China growth numbers are going to be crucial for the Aussie dollar reaction. And of course, the other sector that we watch very closely is the material space. We did see New York copper down by 0.4% on Friday. So I think going into these numbers, there is a little bit of expectation for some weakness in these numbers, although the consensus does still stay at 7.5%.
A reaction for the Australian dollar to the Chinese growth numbers. How important is that for the equity markets, given the high yield plays and sensitivity, I suppose, when it comes to international flows?
Well, I guess there's two sides to the equation. One, the lower Aussie dollar tends to be good news for Australian company earnings. However, that tends to be more of a medium-term effect. And I guess the short-term effect is more in terms of fund inflows and outflows in and out of the Australian share market by overseas investors. As the Aussie dollar falls, that's painful for overseas investors. So usually we do see them cutting out some of their positions in terms of the Australian share market. So that usually leads to weakness in the Australian share market. So short-term, we do see a high correlation with the Aussie dollar. However, the medium to longer term implications are that it is good news for earnings. But of course, today we'll just be watching those fund inflows and outflows and the impact of the Aussie dollar on those overseas investors.
Julia, what's expected there?
Well, in June, we heard from the company saying that it is planning to sell its Australian assets, and that's because its Australian assets do have high cost of production. In fact, if we have a look at its copper asset in Turkey, these production costs are very low. They're forecasting between $365 to $425 an ounce. Now, if you compare that to its Australian assets, Higginsville as well as South Kalgoorlie, both of these projects have production costs of over 1,000 US an ounce. So not surprising that Alacer is looking to sell its Australian assets. At the moment, the stock is in a trading halt, so we are expecting to hear an update around that sale process. Of course, Alacer going into a trading halt is on the same day that we've heard that Barrick is looking to sell its Australian assets as well. It looks like it's entered into a formal sale process for its Barnicoat project in WA. So some of those high-cost Australian assets, it does look like under the hammer, and some of those gold miners looking to sell out of those higher-cost Australian assets in favour of some of those cheaper overseas assets because of the weakness that we've seen in the gold price. Over the weekend, we did see gold prices looking quite steady, but I think this is one area to watch because we know that the catchphrases at the moment is cutting costs, minimising capital expenditure, and I think that's going to be at the expense of some of these higher cost Australian assets.
Julia, we'll just quickly to you on that one. This is, of course, before we get to the full-on earnings season here in Australia. Key names?
BHP Billiton and Rio Tinto will be the big ones to watch in the next couple of days. We'll hear from Rio Tinto tomorrow and BHP Billiton on Wednesday. Now, if we have a look at some of the port headland statistics for the quarter, we know that for the quarter we did see iron ore shipments at 81.6 million tonnes and that's an increase of 22% quarter on quarter. So it's actually been quite a good quarter. If we have a look at Rio Tinto, I guess one of the things to watch is it did have a failure of a conveyor belt at Cape Lambert, so that might impact in terms of sales, but we are expecting to see iron ore production there up by 6% quarter on quarter. BHP Billiton, we're going to be watching both the iron ore production as well as the petroleum. They're the two major things that we watch with BHP. In terms of iron ore production, we know that they are approaching a targeted run rate of 200 million tonnes per annum at their WA operation, so that would mean quarterly production of just under 50 million tonnes, and in terms of petroleum, we're expecting it to come in at 63.2 million barrels of oil equivalent. So, and that's that would bring it up to its full-year guidance, and that would bring it up to the 244 million barrels of oil that it is aiming for the full year. So two big ones. Later on during the week, we'll also hear from Woodside Petroleum and Santos in that energy space, so it should be a big week in terms of both the materials and the energy sector.